Hello everyone. Hope you all are doing fine. And to begin with, I wanted to thank all of you for motivating me so much. And I would not disappoint you. I'll do my best to come up with some great videos so that I can add value to your lives and to your portfolio. With that, I actually did not plan on making a video today, but some of you might be panicking after the markets have fallen so much in 4 days. But I don't think there's anything to panic in this. In fact, it is a very healthy correction. There are some reasons, but the primary factor which I feel is that the markets were overvalued and some little correction is perfectly fine. In fact, we all know that markets do not move up in a linear fashion or in a straight line. It always moves in a zigzag fashion. So after some up movement, there will be down movement. So there's nothing to panic. With that, I wanted to begin this video. So in this video, I'll explain basically why the markets are falling, and I also recommend the top 5 stocks that are undervalued or that are available at a fair valuation that you can buy for the long term. To begin with, this is a scene from the movie Hera Fairy. It is one of my favorite movies, and this is a scene in which Akshay Kumar uh, exaggerates some fraudulent scheme where he says 25 दिन में पैसा double. But stock market does not work this way. Yeah, there are a few stocks that can double your money in 25 days, but there are also in fact, many more stocks that make your capital go to zero in 25 days. So be cautious. And one more thing, one size fit all approach does not work for everyone. In fact, it is important. There are so many factors on which you have to depend for allocating different assets and different securities in your portfolio. For example, some investors are very aggressive and some are basically conservative, and there are different requirements, investors of different ages, different incomes. So all these factors need to be considered before you decide which securities to include in your portfolio. Personally, my age is around 35 and I am a bit aggressive in selecting stocks. Basically, I take a bit higher risk compared to other investors. So it is very natural when the markets are rising, my portfolio will rise much more than the market. But similarly, if the markets are falling, just like other aggressive investors, my portfolio will also fall by much more than the market. So it is absolutely normal. There is nothing to panic. In fact, I will also show in one of the slides the impact on my portfolio today. So you will understand there's nothing to panic at all. In fact, I was enjoying the cricket match. I tracked the market once and I realized that, my portfolio is taking a great beating today, but there's nothing to worry. So let's look at the reasons for fall. The US equity markets have been falling since 4 consecutive days. So that is having an impact on the Indian markets. There has been a rise in global bond yields. Bond yields are rising around the world, not only in the US, because markets are expecting that interest rates are soon going to rise, and so basically some money is shifting to bonds. So that is not a problem. In fact, that keeps happening from time to time, and there's also the concern of financial tightening, in which not only in the US, in fact, in India also the RBI is looking to engage in contractionary monetary policy, which basically focuses on normalizing interest rates, or basically increasing the interest rates a little, so the easy money and very liquid money is not easily available. So stock markets are taking a bit, and as you can see, some of the big Indian companies have not been able to generate earnings as the markets expected. So that is having some negative impact on the market. Markets were expecting too much because of the high valuations, but some of the earnings have disappointed them. So there has been some correction. There are also inflation concerns. In fact, inflation concern is one of the main reasons why the Fed, RBI and other central banks are looking to increase interest rates, so that the supposed bubble can be curtailed a bit. And there's also the one main reason is in the coming days we have the budget. So the market is a little bit on the fearful side. They are not taking any bets or not being aggressive, they are being a bit cautious. So that are all the reasons. So let's look at the broad market indices. Nifty 50, in fact, Nifty 50 recovered quite a bit towards the end, but still it was down it was down by 0.8%. Compared to that, Nifty mid cap 100 and Nifty small cap 100 were down by more than 2%. In fact, Nifty mid cap 100 2.39%, and Nifty small cap 100 2.28%. At the same time, one more thing to check here is that India VIX has risen by about 6.16% to 18.89. So that is a bit of concern, because VIX means volatility index. It says that the volatility has increased quite a bit, and the market is a bit scary, and the anxiety volatility is increasing in the market. So, but that's okay. In fact, now look at the sectoral indices. All the major sectors were down. In fact, only sector that was in positive today was Nifty FMCG, fast moving consumer goods. In fact, FMCG is one of the defensive sectors. So when the overall market is falling, the FMCG does relatively better than the other sectors. And you can see that Nifty Media, Nifty PSU Bank, and Nifty Consumer Durables, Nifty Realty have taken quite a big hit today. Now let's move on to the candlestick chart. Yeah, we can see that for the 4 days the markets are being falling, but the good thing is markets recovered quite a bit towards the later half. In fact, you can see that green candlestick has been formed on today. In fact, the closing price was a little more than the closing price was a little more than the opening price. You can see that the body is hardly visible in this graph. So if I stretch a bit, yeah, you can see that the opening price and the ending of Nifty 50 has been around the same level. So I would say that it is a bit positive, because the closing was very close to the opening. And if any of you want me to make a separate video on candlesticks, on how to study candlestick chart, I'll make one. And one more thing to check here is that the Nifty is back to its support level. At one time, it fell far below its support level of 17,000, around 17,600, 17,650, but it moved back to its support level. So now I would say that the market is a bit on the neutral side. We will have to see how it does on Monday. As you can see, we can see the day's movement through this graph. The Nifty was lowest around 3 p.m., but then it started rising rapidly, and it hit a low of 17,485, and then it recovered to 17,617. That's quite a big recovery. So I would say that's positive. In fact, it was a bit surprising for me that the markets behaved this way today, but somehow all these factors are making the markets nervous, and also the budget is in focus. So markets are a bit on the cautious side, and FIIs are selling constantly. Since October, they have sold around 1 lakh crores of their holdings. Yeah, this is my core portfolio. I have 3 portfolios, but this is my core portfolio, in which I took a hit of more than 3%, as you can see from this graph. But that is okay. In fact, I am making decent profits right now, and I got an opportunity to enter into some stocks that I was not able to get earlier. So that is okay for me. Yeah, now I'll suggest some stocks that you can add at this level. HDFC Bank is always a great stock. In fact, the banking sector overall has been underperforming since 1 year. All other sectors have moved up so much since the first wave of COVID ended, but HDFC Bank and other banks have not been performing so brightly. But now I think it is a good time to add HDFC Bank. It has recently posted very good quarterly results, and it is available at a reasonable valuation of PE of around 24. which is very reasonable. And obviously, there is nothing much to say about HDFC Bank. It has one of the great management, and it is a leading bank in the country. And as the economy grows, HDFC Bank will surely do well. And especially with regard to banking, I tend to avoid banks with any problems or any issues in management. Especially with banking and financial sector, the management becomes very important. Another great stock is HUL. It is again posted very good quarterly results. It is available at a reasonable valuation, and since the markets are nervous, are bit on the negative side, so HUL is one of the great stocks to add, because it lies in the defensive sector of FMCG, and FMCG sector does well when the markets are in pressure, and it is all available at a 19% discount from 52-week high. Another great stock to add is LTTS. It has posted results 2 or 3 days back, but results were not so good. So markets gave a great punishment to this stock, and now in fact today it also fell by around 6%. But now I think it is an oversold zone. For the long term, it can be added now. You can add in 2-3 installments, and it is a great stock to add for the long term. I am absolutely bullish about this stock. And it is available around 20% discount from 52-week high. Another great stock that took a great beating today is Sona BLW. As you can see that it has fallen to around 700 levels, and from the candlestick chart you can see that it is a good support for this company. So from here from this point, the risk to reward ratio becomes favorable. Obviously, we cannot predict the market, especially in the short term or in the coming days. But the good thing is that from this point, the reward to risk ratio is in our favor. But it can correct further. So bit cautious investors can wait a bit before adding this stock to see if it moves up from here. And aggressive investors, I think they can add from this level. Another good company that should be added today is KNR Construction. First of all, it is available at a very reasonable valuation of 27 PE. FIIs and DIIs have increased their holding recently. There are expectations from the budget. It is being suggested that the budget will contain provisions for sectors like infra. In fact, if any economy needs to grow rapidly, the infrastructure sector has to do very well, and the government is very likely to push the infrastructure sector. So the budget can be positive for this company, and basically it is a company that focuses on highways, irrigation, water management, river bridges, etc. So I think it is a good company. If you want me to make a detailed video on this stock, I'll make one. Now coming to what I bought today, I bought a few stocks. One of the stocks that I bought was Tina Rubber and Infrastructure. As you can see from this candlestick chart, in fact there is hardly a candlestick from the last many days. For about 10 to 15 days, it was constantly in upper circuit. So basically the opening price, high price, closing price, and low price were all the same. It was opening at the 5% upper circuit and it was closing at the same price. But today it fell by about 5%. So it gave me an opportunity. I was tracking this share for quite a few days, but today I got an opportunity to add this stock. So I'll discuss the reasons why I add this stock. Basically, it is a very futuristic company. It converts waste tires into downstream value-added products. So that is a big positive for me. In fact, as we can see, the automotive sector is going through a transition at this point. Electric vehicles are coming up, and the government is also likely to pass regulations in the coming months that basically may not allow very old vehicles to operate on the roads. So I think it is a futuristic company. It converts waste tires into downstream value-added products, and it pioneered the concept of rubberized asphalt. Rubberized asphalt is basically used in road making, and it has many advantages compared to polymer asphalt. Basically, it is more durable, and it also helps in cutting noise on road. Basically, when vehicles move on road, they make noise. But with rubberized asphalt, the noise level can be reduced quite a bit. And it also The company also provides ultra fine rubber crumb for the rubber industry. And the good thing is it uses waste as an opportunity as a source to create products for other industries. And recently, Dolly Khanna, one of the most popular investors in India, has picked up stake in this company. So that is a big positive for this company, and it has a low PE of 21. So it is available at a fairly good valuation despite about doubling in a few days. So as you can see from the quarterly results, it is growing rapidly from net sales of 38 crores in December 2020. Net sales have grown to around 70 crores in December 2021, and profit after tax from 1.54 crores to around 4 crores, and adjusted EPS 1.8 to 4.68. So profit after tax and adjusted EPS have more than doubled in just a year. So that is a very good thing. Now we can see the yearly results. Net sales have been increasing rapidly, but the one important thing to note here is that net profit was in negative in March 2017, 18, 19, 20. In fact, recently the company has turned profitable. Similarly, the adjusted EPS was negative as well, but so the company is basically turned itself upside down. So that is why it is so much in focus. Now let's look at the balance sheet. Total reserves are increasing from 52 crores to 61 crores from 2017 to 2021. But the good thing is the borrowings are decreasing. So long-term debt is quite low in this company. But one thing of concern here is that current liabilities are more than current assets. So that is a bit of a problem, but again, it is a high risk company. Its market cap is just of 280 crores. So it is not for everyone. In fact, I have also invested a small amount in this company, and I am ready to lose all if the company fails to deliver. So basically, it is for very high risk individuals who are very aggressively betting on small caps. But again, as I suggested in my last video, giving the example of Rahul Dravid, that you should keep your portfolio balanced, and in pursuit of very high returns, do not forget to include quality stocks like quality blue chip stocks. And in this video, I was not able to cover many stocks that are available at very good valuations right now. So there are many other companies, for example, TCS, Infosys, etc., that can be added right now for good returns in the future and with the low risk. So that is a point to consider. And in the next video, I'll basically focus on those sectors, securities and companies in those sectors that can be in focus because of the budget. Basically, my expectation from budget is that infrastructure and especially the textile sector will receive, I think, great push from the government's budget, so that those stocks can be in focus. And I'd like to thank you again for watching this video, and please do not forget to like, subscribe and share this video. And again, this video was just meant for learning purpose. It was not a recommendation related to buying and selling of stocks. Thank you so much. Keep supporting me, and I'll keep coming up with great videos in the future. And that is it. I'll meet you in the next video. Thank you so much.